What's going on, everybody? Stocks by the numbers, welcome back. And I wanted to do a quick update as per request on Celsius Holdings, ticker symbol CELH, listed here on the NASDAQ. Stock down to about 56 and a quarter. As we see, today's range dropped down to sub 55, had a little bit of a bounce back. Still down about 3.5 points, about 6% on the day. And this company, in case you don't know, this company does energy drinks similar to Monster. And they were actually really surpassing analyst expectations for several years here. Even if we go back, looking at some of these numbers here, I mean, we went from 30 million to about 400 million in revenue a quarter just over the course of about the last 3 to 4 years, which is nothing short of impressive. Now, I do know that the company was kind of connected. They got into that combat sports space, and I know a lot of you guys may be familiar with Jake Paul, and he started boxing celebrities, and I know Celsius was like a sponsor with him, so they were constantly kind of just promoting themselves, putting themselves in the spotlight, had people talking about them. They were sponsoring a lot of, creators and whatnot, and the revenue really just started to accelerate. Apparently, I've never seen a population that needs so many energy drinks, but again, the way we personally feel about something really doesn't matter, right? We have to follow the money, we have to follow the revenue. And I just wanted to go back just to show you here. You can see, we're talking second half of 2020 here. Estimates of 33 million. The company beats by over 10%. They post 36. Then estimates jump up to 34. They post almost 36 again. So then they pump up estimates to 42, but they post 50. Then they pump estimates to north of 50. They post 65. Look at these beats. Estimates jump up to almost 75. They post almost 95. Look at this, 92. They post over 100. So then they jump up to 114. They post 133. Look at these beats here. 148. They post 154. 162. They post 188. Then we finally missed. By pumping up those estimates to 180, the company still showed tremendous growth, but happened to miss by about 1% here this quarter. Stock had a little bit of a sell-off. Then they bounce right back. Look at the estimates jumping up to almost 220 million. The company posted almost 260 million, beating that estimate by almost 20%. Then they kept it going. Look at this, 277. They post 3.25. Then 351, they post 384. So it seemed like analysts were trying, not necessarily to like trip up the company, but they wanted to see, in my opinion, kind of how high they can pump up these estimates before the company actually, came up short, or we saw a potential slowing or a plateauing in the revenue of the business. And it looks like the last couple of quarters kind of seem kind of flat in my eyes, but still very impressive. And that growth, again, going from 30 million to almost 400 million just in a couple of years, nothing short of impressive here. Company did a 3-for-1 stock split, as you see, tail end of 23. Stock goes from like 160 down to 50. We kind of stayed flat until next quarter, and then boom, we had a pop up. And now the company recently reported earnings, we see a drop down. But 2 quarters ago, again, 347 million, beating those 331 estimates. And now last quarter, they jumped estimates up to 390 million, and the company posted about 350 and change again. So that seems like we may have a little bit of plateauing taking place. But also remember, look at how this has been on the up and up. And what do I always tell you? That in my opinion, certain situations like this, if we just keep climbing a stock, then even if we have an earnings beat or potentially a slight earnings miss, the stock could really start to take a hit just because we went up so much. So a lot of people might not think this is justified, and believe me, I appreciate the fact that these numbers have been growing very, very well. So, I'm not necessarily saying the stock shouldn't be up, right? But last time we spoke about it, we had this big long-term rising wedge. It looks like technically if we extend this out, I know the stock did split, right? But now you can see we were kind of bouncing around this bottom trend line, and now we kind of started to break down. So I really don't think we're going to come all the way down here. I mean, we'd be talking about a $7 stock, so that might be a little extreme. But if we look at the last time we kind of sausaged and had our little sideways momentum taking place here, you can see we're at like 50 to maybe like 52 and a half. So in my opinion, we might have about another 10% sell-off or so coming in. And the company could be a good buy on a dip, again, especially since apparently everyone loves energy drinks. And this company, the marketing team, again, really seems to be doing a very, very good job. So If this is a situation where you're watching it and you're waiting for like a 50 to potentially happen or a sub 50, and then you're going to step in and buy that dip, in my opinion, it makes sense. It's understandable. But I wanted to look at the numbers real quick because we have market cap 13 billion, right? And revenue just recently got up to like that 300 million range. So you know what I'm going to say, but we have a PE here at 65 and a half. It was significantly higher. So the fact that it's coming down, it's a little bit more realistic, but of course could be viewed as a little overvalued here with the PE of 65. But the beta, again, the beta of the stock is the volatility of the stock in relation to the overall volatility of the market. And you can see it's just slightly more volatile than the market. EPS has been solid though, right? We're net income positive here, 4 beats in a row. And annually, again, you can see, look at 21. Coming out of those lockdowns, company was bringing in 300 million for the year. For the year. Now we're bringing in more than that per quarter. Over to 22, revenue doubled to 650. Over to 23, revenue doubled again. We're up to 1.3 billion. So my main concern is the profitability is very nice off of this product. So we can look at steady profits and steady growth here, but 1.3 billion for the year, 13 billion market cap. So even after this big sell-off, we're still trading roughly 10 times annual revenue with a 65 times earnings, right? 65 PE. So in my opinion, a little overvalued. And also we can see this is the first time that we actually had a slight dip down in revenue, even though it did immediately recover. The good news is the revenue and the net margin percentage is up year over year, right? If we go back Q1 of 23, we can see 260 million, net margin about 16%. Now we're up to 355 million, net margin almost 22%. So technically the company is growing year over year still. And for the most part, we're basically maintaining and keeping this growth quarter over quarter, it looks like. So that's why, again, I'm saying if they want to continue to beat it up and kind of quote unquote bring it back down to earth, we may see low 50s. And it's also a support level. We have key pivot points down at the 50s. But even if we stretch this out as well, you can see this was top line resistance here. That's going from the highs of, looks like the first week of November 21, connecting to those highs there of June 23rd, 23, looks like maybe mid-July 2023. So that trend line's cutting across. And if we extend that out, we can see that technically now, all of these trend lines, if we pull them out, see, we broke below them, right? So technically, and we could also see that we tried to regain that trend line and recently rejected. So the stock right now may look quote unquote weak a little bit in the technicals. That's why I'm saying if it does continue to pull back a couple of more points here to the low 50 range, I personally wouldn't be surprised. Of course, if you guys own it, you're going to want it to, bounce back and get back above the trend line. It's understandable. But, may take a little bit of time because, again, you did kind of go on a massive run for several years. I mean, basically coming out of the lockdown, look at this. Again, this is post-split, of course. But we can see $1, which is essentially $3. And then the stock runs up to $35, which is $105, right? Times 3. So, the stock is up massive here over the years. So when things like this pull back, again, in my opinion, you have to deal with the short-term volatility if you're hoping for that long-term growth, right? And we know that these stocks can pop and drop from quarter to quarter. But if you're still hanging on this entire time and you're, still confident in that growth, then, I'm really not here to sway you otherwise. But I'm just laying out, again, in my opinion, 10 times annual revenue, 65 times earnings could be viewed as a little overvalued, right? If we pull up the forecast here, everyone for the most part is bullish on it, except for this one guy. But we can see that we have 21 analysts covering the position, 13 giving it a strong buy, 2 giving it a buy, 5 giving it a hold. So everyone for the most part is saying either buy it or hold it. You have one guy over here saying, I think it's a strong sell. And listen, I respect it because whether they're right or wrong, we all know, right? And it takes some confidence, takes a little gusto to swim against the stream, be that outspoken voice that no one wants to hear, or is just kind of showing you a different view than everyone else. But for the most part, revenue has been very steady. Again, they missed here last quarter, but it's only the second miss going back the last 8 quarters. So revenue has been steady, but we can see now if we're kind of going to potentially stay in like this 350 to 380 range now, we can see next quarter estimates are north of 400 million. So we may have a situation where now back-to-back quarters, we may see misses on the revenue side. And then after that, you can see forecasts up to north of 480 million. So analysts are still expecting pretty intense growth to take place in this company, even throughout 24 and even going into 2025. So unfortunately, earnings, we don't know, right? So only time will tell what they actually report, how the growth looks. But I will say a lot of the fundamentals do look pretty solid. And same thing on the profitability side. We only have 2 misses over the last 8 quarters. So the company has been pretty solid. So that's why I'm saying if the stock does pull back 53, 52, and you jump in and you buy that dip, pretty understandable in my opinion. But let's just look at some of the financials real quick. Debt is not a problem for this company just because they became wildly popular. And apparently it really didn't cost them that much to do so. So what we're seeing here over the years is we're seeing an abundance of cash on hand now, but we're also seeing very, very light debt here. Look at this. Even going back this time last year, debt 1.17 million, sub a million, 1.3, 2.19 million, back down to sub 2 million. So we know when we're dealing with a multi-billion-dollar company, to say that they're holding 2, 3, 5 million in debt, I mean, that's nothing. That's a drop in the bucket. We know that. And of course, we can see the cash. Look at the cash climbing here for the most part consistently. But we can see here, look at this, 633 million, 680, 760, 755, up to almost 880 million in cash on hand. So that's why, obviously, the debt isn't a big deal. They could take care of that right now, but they really don't have to. But the big cash on hand is always, always a very, very good sign. And companies could do multiple things with this cash. Again, they can do acquisitions of smaller cap companies. They could do share buybacks. They can, who knows, maybe they'll pay a dividend. Who knows, right? But for the most part, we do have pretty solid fundamentals. We have to call it like we see it. And even though it might be overvalued, everything is kind of checking all those boxes. We have assets outweighing liabilities in both the short and long term. My main concern here is that, again, we did go pretty high pretty quick. So when looking at something here like the book value, it seems a little potentially overextended. Right? Assets minus liabilities yields total equity. And the fact that these metrics for the most part are consistently climbing, very, very good sign. Total equity, 1.16 billion. Market cap, 13 billion. Right? So we're trading 13 times equity. Book value here, $1.45. Stock still trading, even after the drop, stock trading here, $56. So that's why I'm saying it might not be what you want to hear, but realistically, if this stock pulls back to 52, 50, 47 and a half, believe it or not, it would be justified because it went up so much so quick that it has the potential to come down so much so quick. And unfortunately, like we see with a lot of stocks, the old saying is the stocks go up like escalators and down like elevators. So you had slow, steady growth over the years, and now today, the last couple of weeks, we'll say, all of a sudden you're chunking down 5%, 7%, 9%, like it's nothing, right? Oh, it's a down day, boom, we're down 8%. So these stocks that really run could take these big hits, but for the most part, everything looking pretty good. The revenue steadily climbing. We can see the cost of goods, for the most part, staying in line. It's about 50% of the revenue they're bringing in. Gross profit, for the most part, consistently increasing up to almost 200 million over the last couple of quarters. Gross profit minus operating expenses yields operating income. Operating income goes from minus 150 million to now positive almost 100 million in the last couple of quarters. So a lot of these numbers are trending in the right direction. And again, as much as some numbers may be viewed as overvalued, it may be justified because the company, again, consistently annihilating these estimates and, of course, getting upgraded and getting price target raises and whatnot. So understandable, but look at the PE here. Even going back, we can see, look, it was well over 100 just a couple of quarters ago, and now it's coming back down to earth, but it's still at 65.5. So that's why I'm saying, even if this PE comes down to 50 and then the stock bottoms out and finds a bounce, we still have, that's what I'm saying, we still have potentially a good 10, 15, maybe even 20% coming in my opinion. Price to sales, we're trading 10 times sales. There were a couple of times we were sub 10 here in single digits, but before that we were up here at the high 11s and 12, even almost 14. So, you know, could be viewed again as a little bit of a high multiple. Price to cash flow, the cash flow actually looks pretty solid, and we can see we were at 54 and then we climbed all the way up to above 100, almost 200. Now we're back down to sub 50, right? So a little bit more realistic. But again, if they pull this, something like this ratio down to 40 as opposed to 50 times cash flow, that's still a pretty high ratio. That's the point I'm trying to make. So if the sell-off continues, my main point is, you know, you can't be too shocked with it. But price to book, same thing. Almost 200 times book value. Even after this big sell-off, we're still trading 41 times book. There are not many companies out there that are trading 30, 40, 50 times book. Even something like, I think, Airbnb, when I used to look at it and I said, in my opinion, could be a little overvalued, I think they were only trading like 12 or 14 times book, right? This stock trading over 40 times book value still right now. So that's why I'm saying we could potentially come back down. And the enterprise value, again, basically what another company would be willing to pay for it, usually it's significantly higher than the current market cap, and we can see we're at about 13.8 billion, market cap right now 13.15. However, we did just have a sell-off, so it might have been basically in line. But again, in my opinion, I do think it should come back down to earth. I mean, if we're trading 12, 13 times annual revenue, we can easily bring that down to 9, 10 times annual revenue, and it could still be viewed as overvalued. So that's why I'm saying, again, I'm not necessarily betting against you or hoping for some negativity here, but I'm just letting you know, if the sell-off continues, you really can't be looking for blood, because we did go on a massive run here in this stock, and technically they did just miss earnings, even though, again, I understand estimates were higher. But all of our return percentages are up, obviously. If we look at something like the gross margin percentage here, we can see it was consistently increasing, had a slight dip. Now it's up to almost 51%. That's the highest it's been going back to the last 6 or 7 quarters. So this is why, again, if it does dip down 53, 52, and you step in and you go in kind of heavy on that big sell-off, I can understand it. Because, again, a lot of these metrics are heading in the right direction. Operating margin down at about 23.4%. That's not the highest it was. We were above 25. But year over year, just let me check these columns here. So this is Q1. So, yeah, so this time last year, gross margin 43%. Now it's up to 51. This time last year, operating margin 17%, just went positive. Now it's up to north of 23%. So this is what I mean. Year over year, a lot of these numbers are up. So if the stock does bounce and rebound and climb back up to 60, 65, I wouldn't be shocked either. But I do still think, in my opinion, it's a little overvalued. EBITDA up nicely year over year. Technically not the highest it's been. We hit north of 25. We're down here at 23.7. But this time last year, we're at 17.5. Net margin percentage we looked at before, it's almost 22%. That's the highest it's been going back the last several quarters. And this time last year, we were at about 16%. So these margins are up nicely, and a lot of these metrics are technically up, not down. So that's why, again, I can't really bash the company, because there's nothing to bash. The numbers look pretty solid. They're just a little high, in my opinion. Inventory turnover, we went from 2.5 down to 2, and then we started climbing up to 3, 3.4, 3.4, and now above 4. Asset turnover, again, how much revenue the company's generating off of said assets on its balance sheet. Well, the revenue keeps climbing, and even though the assets are slowly going up as well, they're being outpaced by the growth in revenue. So we can see the asset turnover actually went from 0.7, got above 1, and it pulled back here to 0.8, but now it's basically back at 1. Our debt ratios are essentially non-existent, right? Because we're talking about everything valued at the hundreds of millions, if not billions, and the debt is 2 million. So again, that's a drop in the bucket. But overall, the company really seems to be doing well. It did just go very high, very quick. And again, technically, we're coming off a revenue miss. We just broke below a bunch of these trend lines. So that's why I'm saying maybe worst case could be the bottom of this sideways range, which, as you see, maybe like 48. If we go to the bottom of the bodies of those candles, we're looking at about 49. If we just go kind of mid-range, you can see we're looking at about 51.60, which is kind of the high of this little channel that we had in between these two earnings reports. So that's why maybe that's where the low of the low is going to be. Looks like maybe about 52, high 51s, and then maybe the stock will bounce and gain some momentum and try to get back up to this trend line here of about 65 and a third going into these earnings. Next earnings coming out estimated for about the first week of August. Estimates on the EPS side, 24 cents, and the revenue estimates are over 400 million. So we have to see if the company is able to bounce back from a slight revenue miss and beat that estimate of 400 plus million. Only time will tell, but we can see maintained equal weight Morgan Stanley, price target 68, right? Stock right now at 56. Truist initiates coverage at hold. Hold rating gave it a $60 price target. So, yeah, I guess because everyone else had 65, 68 price targets, and they come out and say, it's kind of fair value. So I guess the stock took a hit on that news. Average, daily volume above average volume. Okay, let's see, what do we got here? Yeah, I'm not reading all that. Hold by Truist, 60, we know this. Yep. Would you buy the dip? Yeah, see, outsized returns. Down 37% from the highs. This was written a few days ago, though. Yeah, see, they talk about the missing revenue. That's another reason why, again, if a stock is consistently positive and on the up and up, kind of similar to what you're seeing now with NVIDIA, it's like any slight negative, any slight miss, if you can give Wall Street the opportunity for a big sell-off and a big pullback, they're going to take it. They're going to take it. Gross margin improved. Yes, we looked at all this. Aims to maintain a gross margin in the high 40s. Okay, we did hit slightly above 50 a couple of times, so we'll see how Wall Street reacts to that over the next couple of quarters. If the gross margin does maintain the high 40s, maybe they might beat it up a little bit because of it. Let's see. Yeah, we have a lot of cash on hand. We looked at that, almost 900 million. Very nice. Okay. Held a market share of 10.5%, down from 10.8%. Still pretty impressive, just over the last couple of years, to now grab 10% market share. So that's what I mean. The sales really seem to be growing nicely, and for the most part are consistent. So that's why I'm saying, if it does dip down big, and you're bullish and you step in on that dip, I can't necessarily disagree with you too much, right? But compared to a lot of other stocks we looked at, we could make the argument that we're still a little overvalued. Here we go. Initiates outperform $87 price target, BMP. So that's why, for the most part, everyone's looking at these growing numbers, and that's why, for the most part, it seems people are, 65, 75, 87 here. So DraftKings Dow. Yep. Where are we going now? We're going back just a couple of days. Maxim cuts price target to 90 from 110, but maintains a buy. Maintain buy. Slowdown concerns. PepsiCo, its major distribution partner, reduced inventory of the energy drink by $20 to $30 million. This comes after Pepsi made a similar cut in the prior quarter. So if Pepsi is the major distributor and they're potentially seeing a slowdown in sales or demand, I can understand why the stock recently took a hit. I can understand why this analyst at Roth reduced price target from 96 to 87, right? But that's still higher than where we are, so it's a buy. To come at 406 million, down from his prior estimate of 453. Wall Street consensus estimate 415. Yeah, it's still good growth. It's still good growth. Stifle cut price target to 85 from 95, 400 million. So a lot of people feel that even though they might come in slightly below this estimate, a lot of people seem to be pegging that 400 plus million mark. So they're giving them the benefit of the doubt, it looks like, believing that the company will be able to hit that revenue mark. But again, the fact that if Pepsi's the major distributor and they're kind of asking for a little bit less now for the last couple of quarters, we may be seeing the potential slowdown or plateauing, the potential ceiling that these sales are now going to hit. And that's why these pumped up high 400 million numbers in revenue quarter over quarter that they're forecasting throughout 24 and 2025, we may start seeing more misses than beats now moving forward over the next, 4 or 5 quarters. But again, we're speculating. Only time will tell. Expect sales to grow 30% each year in 24 and 25. Average price target 92, 56% upside from the current level. But that was, again, a couple of days ago. Canada, brand took more than 5% market share in Canada within the first 2 months of launch. So this is why, again, if they're potentially seeing slowdown, let's say here domestically in the States, if they're able to branch out as we're seeing into Canada, boom, we grab 5% market share. Oh, they start going into, European countries. Oh, we're grabbing 3%, 5% market share over there. It may potentially outweigh any slowing of sales we may be seeing here in the States. So even if, that something like that Pepsi news coming out is viewed as a negative, we can still potentially see revenue beating these estimates. I'm just very blown away that, people love these energy drinks. But to each their own. Pepsi, 550 million, 8.5% ownership. Yep, big growth. Soaring from $2 before pandemic to its peak at $96 by March. Signs of slowing growth have weighed on share prices, caused volatility in recent months. So, unfortunately, this is kind of a wait and see mode, in my opinion, because I do think it does continue to sell off, and we could see kind of lower lows here into the low 50s. But again, if you step in here on this dip at 51.50 and then you ride it up going into earnings and you kind of assume that they're going to beat, I guess I can appreciate where you're coming from. Looking at stock charts real quick, I'll let you go. We can see the RSI now on the daily down here at 29 and a third, 29 and a quarter. We can see, though, that hasn't stopped the sell-off recently, just a couple of weeks ago. So we might have to look more at the weekly RSI as opposed to the daily RSI, because technically on the daily side, we should have a bounce here soon, but it didn't necessarily happen last time. So that's why the bottom Bollinger Band here of 52.14, that could potentially be the next stop. And it looked like the MACD wanted to kind of flatten out and start climbing, and then we had another big drop today. So it might take a while for the MACD to get back up and cross, but here on the weekly, we can see the RSI still sitting here at 40, right? So this is why we may have a little more room to drop. Bottom Bollinger Band on the weekly, 54.18. So that's why if we drop to like 53, 52, and then we bounce, in my opinion, would kind of make sense. And the stock would most likely try to reclaim this 50-day moving average back here in the 60s. But MACD straight down. Let's look at the pivot points real quick. I'll let you go. And we can see on the weekly, our next potential pivot point is about $50. So that's why I'm saying maybe we could see 10-15% more of a sell-off over maybe the next week or two. But RSI does look low, so if a bunch of people are stepping in today, buying this big drop on this low RSI, it's understandable. But next support level here on the daily, 54.31. So we have to see if it does continue to keep dropping and approach this level, and then we have to see, does it bounce and close above it, showing some potential reversal momentum back to 64, 65, or do we approach this and then everyone jumps on board with puts and continues to short it even more because it approached the next level, so then we bring it down to maybe 51.50. So right now it does kind of seem in between, so the next couple of days might draw out, more of a clearer picture. But again, overall Celsius, a lot of these numbers are growing nicely, and even if they come up short, they're still showing like 20-25% growth year over year. So if you're pumped about this one, obviously I wish you the best of luck. They do have a decent amount of cash on hand, 2 million in debt, which is nothing. They are trading at high multiples though, price to sales, price to cash flow, price to book. But, you know, I don't know. In my opinion, hard one to call. And that's why usually I would say a situation like this, I would probably, again, be kind of wait and see. And I'd probably be more leaning towards it going down first as opposed to going up. But I don't know. Let me know what you guys think in the comments below, because obviously if you were involved in this one over the last year or two, you're up huge. So you probably love the company and you're probably very bullish on it. But again, we do have to kind of be realistic, and we're trading what, 60 times earnings, we're trading 60 times book, we're trading 13 times annual, 10 times annual revenue. So this is why, again, we could potentially pull back, and we did recently reject this trend line, and we have some support levels coming up down in the mid to low 50s. So that's why, in my opinion, I think we go down before we go up. But let me know what you guys think in the comments section. I'm going to end it there because I probably talked too much. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm, right? Helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, they are very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thanks for your time. Have a good day.